The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. Good to be back after a week's vacation. Had to force myself during my usual 11 o'clock hour on Tiger Technicians Hour to actually go out and play tennis just to get away from the market. Not that I didn't do a lot of charts and analyzing, still managed to send out charts every day to my subscribers. And of course, over the weekend, 10, 11, 12, 14, I don't know how many charts I sent out by this morning. Most importantly, all the work that I did suggested, I know it sounds ridiculous. It suggests there should be a leg D to the upside above 18,622 in the Dow. Isn't that crazy? With all the stuff that's going on. Here's the 10-minute chart, leg B. Beautiful up channel that was, I showed subscribers last night as we were making that leg D. It actually was a peak D when I did it. Said that we should pull back, but so far the action was very good. And then what happened? We went from 2177.75, whoops, down to 2162.25. And now what we're looking at is leg B strong. And if leg B is able to take us above 2172 in the next 20 minutes, that's going to be very positive. And I suggest that the low, at least for the next couple of days, might be in this morning. All right, let's get to the nitty-gritties. And what we're looking at is the VIX index at 12.22 underneath the teens. It's in the 12s. Shows us that there's buying pressure extant. They are still continuing to buy. The rotation into the steel stocks that I've been talking about for a couple of weeks, I think that's kind of done just for this very moment. While there's a little bit of a pullback, SLX is at a fantastic move. Where did it go? Over there. SLX, which is the steel ETF, making a G/C. I suspect that, and the weekly chart has gone in that left side, right side price time match. That should go to this week. Instead, it went to last week, and we broke above the little gap that I thought would be the left side resistance at 31.35. We did manage to go to 32, was it? 32.46 on Friday. And now we're pulling back a little bit, but this is still a very strong monthly chart and weekly chart. So we'll be looking at pullbacks to see what to do in terms of the steel. Well, let's just go through the numbers, and I can do this since it's the beginning of the week, since it's the beginning of the month, since it is the first day back after a vacation. The Dow is up 15 at 18,448. We kind of went long, actually one of our more aggressive longs this morning. This has been time. Oh, this chart shows it beautifully. You see this chart here of the Dow? This is what I show my subscribers every day. In fact, let me do this since the beginning of the week. Let's just take a little time. Yeah, no need to rush. There's nothing to do here, just to watch the market slowly worm its way higher, I think. Okay, here we go. This is my chart that I just showed you. Now, this is what, no, that's not it. That's it. That is it, right? Good grief, how many charts did I send? 10 minutes. I want the, I'll get it. Give me a second. Here we go. There it is. So that's the chart I sent out on Saturday to show that there was a beautiful down channel, that we had used time rather than price. To me, that is as important a component as anything else in the market. In your technical toolbox, in your huge Sears and Roebuck 1940s toolbox you had to carry with 5 hands, that toolbox has all the tools, plus the modern ones, of course. And in this particular instance, we have to consider time is as important a tool as price. And the Dow pulled back from the 18,622 level to the 18,368, about 260 points or so. And it pulled back using up 7 sessions, but not that much in price. The price should have gone down a lot more. To me, that is very important. And when we are looking at the upside, what we need to see this is what I sent to my subscribers, just a lot of information. And I said that right at the end here, Monday, as a Dow plus 50s that holds mid-morning would be good. A slide of minus 15s holding will be very poor. And I do mean very poor because that'll take us below the 18,368 low. That'll start a leg D to the downside. I don't like to see Ds in corrections if I can help it. A, B, C, great, especially just a single A to the downside. That's very positive. Then in the overview section, what I said was that even with the action Friday of Exxon and Chevron cascading lower, the Dow held really well. I like that. Now, even with oil sliding, the Dow held very well. And the Dow has actually been the weakest link since the other indexes like the SPY, the S&P, and the Qs have gone to leg Ds. That's that requisite is to look for a leg D. Okay, so now let's go through these numbers. How long do I have? Yep, 3 minutes. Here we go. The Dow's at 18,458, up 25. It needs to get above, I would say it needs to get above 18,490s to really say, aha, now we've made the cup formation and we can start a move in the MACD towards trying to get back to positive, and stochastic can try to rally from 65%. Maybe it can get to 80% by midweek. We'll see. But in the meantime, a reversal today going below today's low of 18,390 would be very negative. Just make it real simple. And the VIX index trading right now at 12.12, popping up to 12.40s or higher, says, uh-oh, be careful. Market's going to actually pull back yet again intraday. Okay, now let's go to the S&P. Look, SPX, PX.X, trading at 2177, up 4.30, slightly better than the Dow, up 0.20%. Dow's up 0.14. Leg D is extending higher. I know this pattern very well, but knowing it and seeing the results of the next move those are two different things. In other words, I know this pattern very well because very often when you've gone sideways, you remember I actually had drawn in this oval pattern. When you break to the upside, that becomes very positive and it starts the neck formation. Think of this as a long leg in the stalk leg formation. This is the body, takes time in an oval pattern. The neck starts to break to the upside. The narrower the body and the longer, the bigger the chance that the breakout actually starts a stronger move than one would normally expect. Leg D in the weekly, only leg, I'm calling this leg B in the monthly. That is really positive. Doesn't mean to say you couldn't have a 200-point decline in the S&P at any point. What it does say is we've started a buy mode and we should go to higher legs to the upside. Now, being the first trading day of the new month, going above Friday's high, continues the monthly leg B, continues the weekly leg D, and it starts leg D, continues leg D in the daily. Very positive. Look at the QQQ series. I'm about to run out of time. Don't do that. QQQ, only 3 of them, not 4. Used to be 4. Leg D with a doji. What I'd said to subscribers this morning in my Traders Corner, pushing above 115.45, especially closing above, would be very, very positive. Making a move like this intraday with the doji candle that we just saw Friday, that says that this could become a marker for the upside. Quickly, we're going to do this. We're going to go to the gold is down 70 cents and 17. Whoops, where did it go? At 13.56. Silver's up 22 cents at 20.57. Copper is down 99. Crude oil is down 99 cents at 40.62. Copper is and bonds are down over a point. I'll be back. Basil Chapman, and the dollar is up 12 cents. I'll be right back after these
Today,
messages.
it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1 Again, 855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, Basil Chapman, Target Technicians Hour. Dow's at 29, S&P's up 4, and what we're looking at is in the 10-minute chart, we just bumped into resistance, Chapman Wave inside wedge resistance area. This is that green line, and that is giving a target by late this afternoon of testing the 2177 level, which was the high that was made a little earlier today, earlier this morning at 10 past 2. And now what we're looking at is a situation where you can tell that there is buying pressure, but it is reluctant buying pressure, and it is pressure that is against a backdrop of a lot of skepticism. When all of a sudden the skeptics become convinced that the market is going higher, that's when we should get a little later on a deeper pullback. And that's going to be a big thing, because we need to get a test of the next level of resistance. We took out the 2172 level, and now we've pulled back a little bit. Now we want to see the next level, 2175 on the E-mini. That's going to be very important. To close below 2168, just 4 points lower, would say to me that it's going to be a struggle for most of the day, even though there's an upside bias. At this point, I think that the upside bias is going to turn from unconvinced to convinced. So the Q's, leg D. Look at this. The IWM has gone to a leg E, but it's held the 9-period moving average, this black line, so beautifully, and the MACD is still strong. Stochastic's at 88%. Weekly is still strong. I like what I'm seeing. For the first time, we're looking at a chart pattern that says on a monthly basis, since the big crash of August with that smash to the downside, having gone from 129 to 93, I mean, that's 36 points, all right? That is a huge decline. And now the rally back has gone above all the resistance points. I like what I see. I thought today I would get into the politics of politics. I just don't feel like wasting my time. You got someone here who was given a gift and has just absolutely squandered it, has no clue. For someone who talks about the art of the deal, this is a person who makes an issue out of non-issues. And that to me is just pathetic. I still want to talk about it, but I don't want to waste time right now. And you've got someone else on the other side who, I've said it for years, when the Democratic Party finally says that this is the way we're going to go, no one can stand in the way, because that's the way that everybody, the talking points just get followed to the nth degree. And that's exactly what you're seeing. Republicans have never learned how to use talking points. Stupid. Okay, so let's go on. And we're talking about the New York Stock Exchange. I spent a lot of time this weekend on the New York Stock Exchange. I gave my subscribers a whole outlook on the monthly and then on the daily, weekly, monthly together, as I call them the 3 time frames. And in this particular instance, what we need to see in the New York Stock Exchange, down 8 at this point at 10,776, this pattern here is a formidable pattern if there is a breakout. If it's not, it becomes formidable resistance. And if you look at the weekly chart, the little cluster formation right there, let me see if I can do it this way. Look at that. We've got a cluster formation having gone nowhere for 3 weeks. This is the tiniest New York Stock Exchange action we've seen over 2 months. Today's the first day, we can't count that. But over 2 months that we have seen, I was going to say forever. Of course, it's not forever, but it feels like forever. I can't go back until maybe May, June of 2014. You've got a couple of months. Oh, look in there. You've got a couple of months. Great. But this is a remarkable action to go to consolidate and then not break out, but not break down. It's very, very, very important. Now let's go on with this. Now, what I wanted to mention was I very rarely get complaints about when I'm talking about my macro view. And when I discuss what I call the politics of politics, I'm not telling you how to vote. I'm just looking at the politics of politics. I'm only going to do this as it relates to the stock market, because the market, as you know, I always talk about, I say the market, people say the stock market hates uncertainty. And I say, what are you talking about? Every single day, it loves uncertainty. That's how it operates. What it hates is uncertainty about uncertainty, and that's when I will bring in the politics. Because if you think it's not going to be impactful this in the next couple of months, believe me, there are going to be moments when the politics of what's being said becomes either hurtful or beneficial to the market, and that's when I will talk about it. So 10,815 is the high that was made on the 14th of July. And then it went down with slightly lower highs and a little bit more deeper, well, I call them, so it's still slightly lower lows within the context of a very narrow range. The move that we're looking at from Friday into today is good. It'll only be absolutely fabulous if you can if the New York Stock Exchange can close over, not close, if it can have a price point that goes above 10,797.99, you go to 10,798. That becomes important because it brings in the 10,815 high of that the 14th of July. And the moment there's a break above it, I will have to call that new leg C. And if it's new leg C, what we're also talking about is that I'm probably going to have no choice but to call this new leg B, not a G, but a B in the weekly chart. And that says that the monthly chart is extended leg B. And all of this is just pointing to the fact that as long as the New York Stock Exchange, which is very big, I mean, this is 2,000-ish stocks, something like that. If there is a break this week by Friday of the close on Friday below 10,600, 10,625 is the 9-period exponential moving average, I will have to say, uh-oh, that is a serious breach of action, and that's going to be a big negative. So far, nice action. It's only down 7, and I think that there's a good chance that by tomorrow we'll try to break that high of Friday. All right. Now let's go on, and I want you to show you something else. Within the gold context, gold has acted very well. This cup formation is trading down just 40 cents at 1357. This cup formation, having not broken down to a leg D, but stopped at a double bottom leg C, and that C in the continuous contract at 1318.20 and then 1318.60, 40 cents higher, made that little arch formation, which says now a cup formation is very important, because there's something going on in the world economies that is suggesting to me that yes, we're seeing buyers in the bonds, so that yields keep going down. The Japanization of our bond yields continues. But at the same time, I think that there are a lot of countries, not just institutions, but countries, that are looking at gold and saying, gold has held extremely well. It has continued from the December low that was at 1057.50, in a single leg A to the upside. 1, 2, 3, 4, 5, 6. This is the 7th month. It was the 7th month in July. This is now the 8th month. My thinking was that this would be the month where we see a peak in the monthly chart, but that the 1275 9-period exponential moving average will hold really well. So I want to talk about it a little bit more when we get back, and I also want to talk about the commodities. I'll be right back. I'll show you the chart as we go out. This is the 10-minute chart. Nice strong leg B. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. So let me just really quickly do a couple of things. I was asked about Vail and Potash. Valet SA is trading at 564, down 11 cents. The weekly chart is the one that really is important because it's in leg D, but within a buy mode underneath the previous peak C. So that always says to me that it's got enough strength to rally, but not to rally to a new recovery high for what I would call a Chapman wave. This is when you get a peak C and you pull back, and you get peak A underneath, and then a peak B, and then C comes about, and then you should get a D that soars past as an overlapping wave. You didn't get that. So I'm a little concerned just short term at 564. If I had it, I'd still try to keep holding it if I brought it lower down. But if I didn't, I would wait, and I'd wait to see if it could test between, it's at 565. If it can test between 534 and 510, it does. I prefer if it didn't get there, but it's got to hold that level. And I think on a very short-term basis, that's what I'm looking at, that it could pull back a little bit, and I'm wrong if it breaks out and goes above 586, because that starts a new leg up. Meantime, I just hold it. It's holding well. I wouldn't do anything. In fact, I would say to you, I'd probably lighten up just a tad now if I've got a good profit, and I try to put that back more towards the 530 to 520 area that I take off right now. That'll reward you, and it'll give you a better entrance for the bounce. But at this point, it's just a little, I don't like the action. Let's put it that way. Just on a short-term basis. Intermediate term, it's holding well. Stochastic is 67% in the weekly, but the MACD is strong. So potash is the one that I'm a little concerned about. I'd mentioned before I went away that it was acting well, that if you held it, you could keep holding it, but you cannot let it get underneath. I wasn't here for that, but I do believe I was here for that low there. Yes, on the 20th of July, the low of 1689. I think I said if it goes underneath the 1650s, I should have said that, because that would have said that the H pattern that goes to an M pattern that I'd already drawn in is what I'd be looking at in the weekly. I didn't think it was something that I would want to hold, and I tightened up the stop. So potash, no, I don't like. Vail, it's a different category, and I think it's holding well. I think it's just a little bit overbought on the shorter term, and that's why I recommend take a little bit off. You can always put that back again. Okay, and the next thing I was asked about was Tesla. Now look at Tesla. So Tesla is using stock, I believe, if I read that correctly, to take over its other company, the Cousins company of Solar City. So I don't like this. This is all stock. There's no money. I mean, basically what we're looking at is a juggling act. And Elon Musk, originally from South Africa, where I'm from, that's the only connection, he's really smart at using the media. And I don't like it when you use the media to raise funds, because I want substance in the company. So all I can say is that what he's doing now is putting the leverage onto Tesla. It's a huge leverage. Maybe he had no choice. So Solar City SL, I can't even remember what it was, TY. So somebody remind me again. SCTY. Solar City. Yep, there it is. Solar City dropped after a peak ABCD. ABCD, two Ds. This is a second D with a doji D. It's down $1.36 to $25.34. Please be careful. I just wouldn't be playing with these stocks. It's just, no. I'm out of those. I did Tesla a couple of times, maybe over its lifetime. And Solar City, I think we did once. I'm not even interested. It's just, no. Be careful. That's all I'm saying. It might not be now, but in 6 months' time, we're going to be looking at this and saying, wow. Because if in 6 months' time the market goes to the all-time highs and really smashes into the 19,000s in the Dow within 6 months, I think Tesla will see the benefit, because people love to buy and show off cars that they can afford. And it should benefit. But as a company, I can't even imagine what each car is actually costing them. All right, so let's just get back to our nitty-gritties here. I want you to go through a couple of things here. The IBB, which I've spoken about a lot in my newsletter. Every day I show the IBB. We've had no position for a little while. This is very unusual. From July of last year, we were short right there at 400.79 was the top, and the next day we went short, and it was the next day at 393, and we were short all the way down to, we took 111 point profit, then it bounced, and we got rally on the upside, got short again, we were up another 20 or 30 points, and then we've been out of it. I spoke about it, I was all ready to buy it right at the low. I missed it, and it was one of those things that, look, it barely had a pullback, and now you've got this huge leg up 7 points at 296 today. Because it closed last week at 289.44, just under the 289.71 high of the left arch formation. This week is really important because it closed this week above 289.71, says that after being battered and hammered, this move for the biotechs, the IBB, iShares of the NASDAQ biotech sector, has the chance now to go higher before the next stage of the decline starts. This is the way I'm thinking here. So I'm just upset because if we were long at that leg D, I would have maybe, I don't know what I would have done because I needed to wait for certain things to happen. But in the meantime, it's spiked up today. It's a beautiful action. It's breakout action actually in this pattern, which could turn out to be very positive. I personally would not be looking to the short side of the IBB. I would be looking towards the next pullback towards 285, which is the 9-period, 200-period moving average crossing right here. I'd be looking to say, hey, is this the time to be buying, or do I want to go to the short side for a peak D, just in a quick pullback of 10, 12 points? I'm not sure. I don't want to touch it right now. It's just way too strong, and it's giving a little credence to the move up in the QQQ. You can see that. Now, I had a question about MDVN. It was a question just about 2-3 weeks ago, or it must have been 3 weeks ago, and I said that it was acting well, but I didn't have anything other than that it was acting well. I put an up arrow in the weekly chart, and this is A, B, C, D. No, I think it's A, B, A, peak B. Sometimes it's just a little too close. 62.94, and there we go, 62.98. I thought it was a C. There's the C, and it's in leg D. But the weekly chart is still very strong. Monthly chart is very, very strong. And the weekly chart is, the daily chart, A, B, C, it's in leg D. So many Ds, it's amazing. That's why I think that when I said that we would worm our way to the upside here for that leg D, I think that's really the case. I don't think it's just going to be a straight up move. I think it's going to be a struggle because we're looking at so many sectors that are rotating from leg Ds and Es in the daily. But in the meantime, back at the ranch, let me do this. Oh, I didn't mean to do that. Sorry. MDVN is Medivation Inc. You know, when they come up with these names, I have a trouble with that Medivation. How am I going to remember Medivation? MDVN, trading at 64.16, up 16 cents. Okay. Ollie, O-L-L-I, question. Oh, I have a couple of questions to go to. Yeah, Ollie's acting well at 26.06. I do have to go to something else right now. XOM, I had a bunch of questions, so I'll do the bunch. XOM is ExxonMobil, trading down 86.40, trading down 2.55 at 86.40. Trying to rally from the big move, turnaround, gap down, and then turn to the upside Friday. I'll talk about this because this is very important because this is what's impacting the Dow. The Dow should be much higher. CVX down 249. Same thing. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So the Wall Street Journal, Saturday, Sunday edition, has U.S. in weakest recovery since 1949. Underwhelming growth. Expansion falls below expectations. Business investment slowdown offsets consumer gain. That's what I meant. That's why I said I will talk about the politics in terms of what we are looking at economically and market-wise. And that should have been the theme over and over and over again. Weakest economy, even though I personally believe that there's been a lot of strength in the economy that hasn't been recognized. Not the point. The point is headlines. That's what you play to. CVX down 245 at 100.03. This is that that what I call the A pattern, the Eiffel Tower. It looks like this. A, and I always make it nice and big and red like that. I go to the highest piker 48. I go to red. Bam. And that's what it looks like. And then I usually put it right in between the left side and the right side. And that's what we're looking at. So it's going to be very important at a peak F in Chevron, trading at 100.05, that if it takes out this week, it doesn't have to even close, but if it takes out 98.77, if it closes below that on Friday, especially if it goes under an inch a week, tries to bounce, can't do more than just a tiny little bounce, and then Friday is very weak, that's going to suggest to me that it's going to weigh on the Dow. The Dow's going to have to use other stocks, which we'll look at in a moment, to rally. And same thing with Exxon. So in terms of the next question I had about crude oil is down again today, down $1.34 at 40.27. You see, this is not good. When I do this, remember the 5-minute chart? 5-minute chart. What happened? Oh, I just hit the wrong thing. So this is going to have to be SPY. Let's go SPY. There we go. If I look at the 5-minute chart, you've got peak A, B, C, D, E, double top at E. And you've pulled back because oil's pulling back. There is a relationship of trend, not necessarily directional percentage move, but just the trend. So the crude oil dragging down the S&P is something at a certain point, if it's later today or tomorrow, and the Dow and the S&P and the Qs are able to divorce themselves from the negative move in crude oil, that'll allow some upside action. And also crude oil is getting real close to a little bit of a bounce. If we can bounce from the 40 level to the 42.50, 43.20 level over the next 2 days, that'll be a market help. That's all I'm looking at. Okay, now, so that I'm done with that. Now what I wanted to do is, the next question was, if you look at this chart here of the yields, look, this is the 30-year The white is the 30-year T-note yield at 22.28. Made a peak A. It's pulled back quite sharply. The 10-year T-note yield, the brownie gold color, is made a peak A, and it's pulled back quite sharply. The 5-year has also pulled back, but I would say the 5 years pulled back more than the 10, and the 10 has pulled back more than the 30-year. So this is worth watching, because any move in the next few days that pushes the 30-year above 23.59, the 10-year above 16.28, and the 5-year above 5-year above, did I say, yeah, 16 above 11.69 will make the difference. At this point, I think we're still looking at the Japanization of our bond yields. Now look at this. This is the wood. You remember WROD, iShares Global Timber and Forestry ETF. Look at that. It made a peak D, pull back very sharply. It hasn't broken above 49.30, but it is at 48.61. So I'm going to be watching this really closely. Could make a little V-shaped pattern there. But the HGX, the Philadelphia Housing Sector Index, beautiful move, went to the weekly chart of peak D, no, leg D, will be a peak D if there's no new high above 256.81. So I wanted to cover that. Now let's go to the nitty-gritties, questions that I was asked if I would look at my Dow Quartet. The Dow Quartet is GE, General Electric, trading up 2 cents at 31.16. Here's the first sign. If General Electric at up 2 cents today, at this point, can move to plus 8 cents or plus 10 by the end of the day, it's going to help the market technically, and that would be a good sign. If it takes out its low today of 31.02, that's really poor action. It means that tomorrow could be, we could see a weak close and a lousy day tomorrow. So in the meantime, I like what I'm seeing. Just on a very short-term basis, G is giving a sign that says this is the point where it could, it doesn't have to, but it's in leg B. The MACD is very wide in its down move, but the stochastics at 7.31% and attempting to rally. So I think this is a move that says the GE might be able to bounce a little bit, and if it does bounce, it's going to help the market. But I don't like the action in the daily. It's a peak D. This is going to be a peak D if this week GE closes below 30.20. Let's call it 30. Close below 30. I have to say peak D, and it's a negative sign for both GE and the market. Leg C up in the monthly chart. So that's GE. IBM, my second one. IBM is acting well. It's up 86 cents today at 161.47. Held the 9-period moving average. Made a peak D. 4 moves down, 4 days down, but not a very big move down in points. And it's a leg D in the weekly chart. My thinking is that there's a chance that IBM at 161.48 could pop 2.25 points to continue leg D this week. But definitely close below 158.70 would be very negative. That's 4 points lower. All right, Triple M, 1, 2, 3. Triple M is acting quite nicely. It's down 11 cents, but it came off its low very nicely. Look at those green candles, even though it's consolidating after a peak C. I don't know if that's a peak D, E, F, G. Could be a G. I don't have to count it right now. It's in a short-term sell mode, and it needs to break that sell mode by rallying from the 178 level. It needs to get by Wednesday afternoon. It must be at 179.30 or higher. It's at 178.20. It's only a point and a quarter. That's where it should be. And if it takes out the low of today, it could retest the low of the 26 at 176.14. I like it for now. And even my weekly chart at peak C suggests that it should make a leg D to the upside. Monthly chart is in leg E/B. I'm really thinking it's a B the way it's acting. All right, that's Triple M. And UTX, the final one. UTX has made a peak D. It's down today, down 69 cents. It's 106.97. Monthly chart, weekly chart is in peak D, leg D, peak D if it doesn't go above 108, 109, no, 108. 108.49. If it goes to 108.50, it starts a new leg up in the daily, and the weekly extends. Monthly chart is in leg B, acting well, but not great. The 120-minute chart tells the story. UTX is still weak today. I'm not sure it's going to do much more. The best it might do if the market rallies is go to a minus 40 cents. I'm going to be watching this closely. A couple of things that I was also asked about. Would I look at Goldman Sachs? Goldman Sachs is right now, here's another case of a peak C. No other way I can count it, and it's used up time more than price. It's not as good a looking chart as the Dow chart, but it's okay. And this says the Goldman at 159 mustn't close under 157.40. It definitely should try by Wednesday to get to 160.97. So it's about a point and a half higher. But if it does take out 164.09, goes to 164.10, that starts a new leg B, I'm calling it. Yeah, that'll be a new leg B in the weekly chart. Monthly chart is improving, but not great. Okay, we've got a break coming up. I can hear my beeper, which I forgot to fix. Dow's up 7, S&P's up 132. Let me show you the chart right now, the 10-minute, pulling back after a peak B. All right, we've been watching this closely. There's that resistance, and there's that support. I'll be back straight after this break. Basil Chapman, Tiger Technicians Hour, Monday edition, August the 1st.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Oh, folks, we're back. So XLF, the S&P Select Financials, trading at 2367, up 2 cents. Made a peak B at 2380 on the 14th. Remember what we were looking at that did the same thing, and I think it was a New York Stock Exchange, whatever it was. We've gone sideways without a new high. If there's a break above 2380, it's up a penny right now. That will start leg C, but it's using a lot of time and a lot of effort just to go nominally higher. It really needs to go above 2393, the high of the week of the 3rd of June, to get a leg D. in the weekly chart. So far, the financials are saying, ho-hum, I don't want to break down, I don't want to break out, I'm just kind of happy where I am, I'm not going anywhere. So I hope that answers the question there. And if you're looking at things like Deutsche Bank, remember, I see nothing here. This is a dangerous move. This 13.13, just please be careful. If you are short, you've got to be careful of the spike up on some good news, but the fact is it looks like it wants to go lower. That's a preferable stance that I would take at this particular point, is looking at the short side. But as a long, I don't see it. But even as a short, you've got to be careful about news, because this thing is really sensitive to news. So let me do this before we break, and you got all the regular hosts coming up today. I just wanted to say, I'm not going to be, there's no bravo here or bravura or any showcase. I'm looking at this very pragmatically. We added another position in a stock that's done very well today. We added another small with a very tight stop. Because it's doing well, it's in an area that should benefit from a market going higher. But all I'm really doing now is we've got our core position longs. So most of them are doing very nicely. Most importantly, what I'm looking at is I want to only trade something like the Dow or the S&P or the Qs on the long side. I want to have a sector, an index, and that's all. I think at this point I'm being a little careful, because as soon as we get close to my leg D in the Dow, if we can get there, we might not get there, I'm looking at the chance that we need to look at the short side. So this is in preparation for something on the short side, and then later we start to move even higher. But let me just make it clear. I'm looking for a bounce somehow or other, maybe this week, of getting to a new recovery high in the Dow so you can get your leg D. Might not happen. It's very unusual for it not to happen, but you have got the other indices already doing that. So it's the missing link, all right? That's number one. Number two is, with the VIX index, even now at 1237, up 50 cents, it needs to get into the 13s, 14s. That's the next step for it, to be able to say you're going to start getting your big moves to the downside, triple-digit moves. But at this particular point, it's suggesting in the 12s, or let's say 13 or less, in the 13s or less, it's saying there's a lot of buying pressure. The moment, if it happens this week, that you see this VIX index pop to the 1350s, the 14 level, this rally is going to come under tremendous pressure. So I just wanted to be clear. So as a trade, we've got a long position on, and maybe it'll work, maybe it won't. We've got a pretty tight stop. Is it like a 1.2% on a short position, a heavy short position? I think that's a pretty reasonable stop. So in the meantime, you're about to go for your swimming lesson. Check out my opening call. This is the most critical phase that we're in. The next couple of weeks, certainly, as I prepare a nice big webinar coming up later in August, this is going to be a major period politically, economically, and market-wise, because this is where we're going to see some real action, and it could be up, it could be down. At this particular point, I think there's still enough residual strength for a little bit more up. Then we've got to be careful. So, Basil Chapman, back again. Hope to see you tomorrow. And just watch closely, watch the markets. And now's not the time to be too aggressive on either side, I would say. I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.